Today we're talking about what has been going on with the crypto industry. How has Bitcoin suddenly risen to a $28,000 mark, and what is going on with the banking collapse? How are so many crypto banks falling under? We'll discuss all of that in today's video. So let's get started. So three major banks related to crypto have fallen under very recently. It all started around March 8th on a Wednesday when the Silvergate bank went under. Then on the same week's Friday, the Silicon Valley Bank was caught by a bank run, and on the same week's Sunday, Signature Bank was taken under. It was shut down. All these three big banks related to crypto were shut down or fell under in the same week. Now let's understand why all of this actually happened, why such bank runs are now happening. So basically, the interest rates that we're given now are higher. The interest rates provided by FOMC and the Fed, they're high. Interest rates high, meaning it is tougher and it's expensive to get debt. Loans are expensive, meaning the loans that I also have currently are more expensive, which gives me less money to play with because loans and my debt is high, which means I have lesser liquid money if I've put my money in asset. Now, to get the liquid cash, I would want to withdraw money from my assets. Now, when most people are withdrawing out money from their assets, the value of the asset will decrease a little bit. Now, when this happens, the bank who have also held their money in assets, their value also goes down, which means that the bank's unrealized losses are higher. Let's take a look at the circle again. When interest rates are high, loans are more expensive. People take out money from their assets so that they can pay back loans, they can use it as liquid cash wherever they want. Banks work on a fractional reserve model. Let's say a bank has $100 worth of deposit. Now a bank will decide a 5-10%, whatever is the percentage that they're going to keep with them. The rest of the money, let's say the 90% of the depositor's money, they will put in an asset for another investments, or they will loan out that money to, again, lenders, but they have fractional reserves. Now, when the asset prices fall because of the increase in interest rates, now let's say when people or companies, they have less money to play with, they would want to withdraw their deposited money from the banks and use that money as liquid cash or pay up their loans. When users withdraw their money from the banks, that makes the banks want to withdraw money from the assets which already had lost their value. So banks are taking a loss by withdrawing their money, and they cannot completely get their money liquidated in a very short period of time. And when people get to know that banks do not have that much assets, that much reserves, that word spreads and everyone wants to withdraw money from the bank. That is what is a bank run. The interest rates are high, meaning asset value goes a little bit down, meaning people withdraw more money from the assets and banks' unrealized loss happens. And when this word spreads that banks do not have money, everyone wants to take out their money from the bank, causing a bank run. Now, this is what majorly happened with all the three banks. Now, let's first start with the Silvergate Bank. What happened? So, you remember the FTX fiasco and collapse, right? FTX had a lot of money in the Silvergate Bank, right? And since then, they've had problems because money is not there anymore and they have liquidity issues, and then people were wanting to deposit money, causing a bank run. This all started from FTX collapse because a lot of money was just down the drains, right? And then depositors' confidence was shaken and everyone was trying to take out money. This is a very simplified understanding of what happened with Silvergate. Now let's discuss what happened with the second bank, which is the Silicon Valley Bank. Do you remember COVID times when people had a little bit more money and companies were getting funded and companies were getting more money in? That is the time when Silicon Valley Bank had more depositors. So a lot of companies were coming to Silicon Valley Bank. We'll call it SVB so it's easier. So more companies were coming to SVB and depositing their money, and SVB had a big war chest, and they decided to invest that money in government bonds. Now, with the current rise in interest rates, the bond value has gone down. The government bond value has gone down, meaning SVB's assets have taken a hit. The value is decreasing a little bit. And in the current times, when companies and startups and people don't have a lot of money to play with, they're withdrawing their money from banks. Now, this also happened with Silicon Valley Bank, when companies were withdrawing their money from the bank to use that money up. In such times, SVB, what they did is they said that they have a little bit less money to play with, so they're wanting to raise a little bit more money. When the word got out, everyone panicked and everyone wanted to withdraw their money from Silicon Valley Bank. And this caused a very big bank run because they didn't have liquid money and they couldn't have withdrawn money from the government bonds that they had, which were long-term bonds. Because so this is what happened. This is why the bank run happened on the Silicon Valley Bank. Now the third bank, which is Signature Bank, basically not much was wrong with the bank, but the government, it's being called and it's being said that this is a strategic move to bring down Signature Bank as well, because even that was a good bank to on-ramp your fiat to crypto, and that was an important, although small, but an important bank for on-ramping. So that was taken under as well, although that could be saved. And it is also being said that even Silicon Valley Bank could have been saved because there were buyers. There were very good A-listed buyers, but the government chose to not do that. And even Signature Bank could be saved likewise, but the banks chose not to do this. Now, this is all a part of a propaganda or a supposed propaganda, which people are calling that the government is wanting to choke down on crypto. It's being called the Operation Choke Point 2.0, where governments are wanting to break down two things. Break down crypto by two major pillars. The first one is banking. The second one is stable coins. So in this Operation Choke Point 2.0, two things are being targeted. One is banking. Second is stable coins. Banking, because you onboard your fiat to crypto. If there will be no place to buy crypto, how will you get into the world of crypto? How will you invest more? And the second thing is stable coins, where you park your money, right? These two things are being sort of taken down by the government so that the whole institution and the whole industry of crypto takes a hit. But what happened conversely showed or reacted to what people were expecting, that Bitcoin rallied because the banking sector is down, the traditional finance is down, which gives you even more belief in Bitcoin that, hey, you know what, if this goes under, I have Bitcoin, I have my asset. Same way why fiat versus gold happened. So fiat versus crypto, right? And that is the whole reason why Bitcoin was established in the first place in 2008, when the whole banking and the housing bubble was collapsed and everything went under, and that is when Bitcoin was born. So these times are currently testing what 2008 had brought in with us. And also Silicon Valley Bank is called the second biggest banking collapse in the US history after what happened in 2008. So all of these things are brought out that this could be a government operation, because in stable coins as well, we've seen what happened with USDC and Circle. We've seen what happened with BUSD and Binance also selling BUSD to get Bitcoin and other assets. So all these things have sort of shaken the investors' trust in the institution, but we are seeing a different rally of Bitcoin altogether. And amid all of this, a very cool thing is happening on Twitter. So Balaji, who was the former CTO of Coinbase, he's come out and he's put out a bet of $2 million on USDC, saying that, hey, you know what, in 90 days by June 17th, Bitcoin is going to cross $1 million mark. Bitcoin is going to be traded at $1 million. And he's put down $2 million for this bet on Twitter, and that's why everyone's excited about the price of Bitcoin. But there's also a flip side to it, which says that, you know what, if tomorrow, which is Wednesday, the FOMC interest rates are decreased, but the inflation still stays high, that causes a hyperinflation. Although your assets will increase in value, but is it real value increase? Because you know what, there's more money printed out there. So is it the actualized value which is increasing, or you just see it, you don't realize it? So that is what is happening. The banking sector collapse, particular to crypto, the crackdown on stable coins, and amid all of this, Balaji comes up. Balaji, by the way, is a very, very followed and, you know, sort of looked up person in the field of crypto, Balaji coming up and saying that, you know what, I bet $2 million that Bitcoin is going to go up to $1 million. That is a very big hope for a lot of people. That's why people are investing more. People are wanting Bitcoin to touch that $1 million mark. All of these things are happening. Let's see what unfolds in the future. Whatever happens, I'm going to bring all of that to you. So stay tuned, subscribe to the channel, like the video if you liked the video, and comment down what you guys would want me to talk about, what you guys would want me to research on and bring it to you. I am all up for all of those things. So thank you for watching the video. Let me know what you guys think of what is currently happening in the industry, what your strategic moves are for the same, and I'll meet you in another video. Bye bye.